leaking top insider stock trades every day until they stop us, November 10th. They tried to stop us last week, but we've officially gotten the CEO Watcher Instagram account back, so that is good news. However, make sure you are following the account across all the platforms and go to ceowatcher.com and sign up there so that if we do get banned again for whatever reason, you'll still get access to all the trades. Speaking of places that they can't ban us, we had a real-time alert come in the Discord this morning at 9:20 a.m. that the CEO at Penn Entertainment had just bought $494,000 of the stock. As you guys know, large CEO purchases have been getting nice little pops over the last few months, so when this real-time alert come in, we took notice and the stock is up about 5% since then already. We also just created a CEO Trades alert channel in the Discord so that now if you only want to get alerted when CEOs buy the stock, you can now just turn on notifications for that channel and real-time CEO alerts come in. Moving on to today's top trades, we had 164 new trades come in, a slightly less bullish day than the last few days with 33% of the unscheduled trades being purchases, but that is still exactly the 10-year median, which is relatively bullish. One of the most interesting purchases that came through was a director at ThreadUp buying $525,000 of the stock, which is his largest purchase ever out of 7. This increased his listed holdings by 12%, and he averages almost 400% 6-month returns on his previous purchases. However, most of these purchases were at the end of 2024, and the stock is up about 700% in the last year, so that's where most of his returns come from. However, if somebody averages 400% 6-month returns, I'm still going to pay attention. The stock has fallen down below the 20 and 50-day, but is still above the 200-day moving average, and this is clearly a very high momentum play. So while it is trading at a very high EV sales multiple, the 34% year-over-year growth this quarter was the highest in the last 4 years. This is also their 4th consecutive quarter of accelerating revenue growth, and their margins even slightly improved. Tariffs on overseas manufacturers, as well as the closing of the de minimis loophole, has really been a very strong tailwind for this company, which is why it's up 700% in the last year. The risks are that there are some concerns for consumer weakness in the holiday season, as well as the possibility of tariffs getting rolled back at any time. So because this is a pure momentum play, I'd want to wait for the stock price to get back up above the 50-day moving average before taking a stab, or if it did happen to fall down and touch that 200-day moving average, that'd be another place worth taking a stab. Find all the top insider trades and get access to the daily email at ceowatcher.com.